Hi trader, welcome to the weekly Forex recap. This time looking at key support and resistance levels at the start of the fourth quarter 2016 at the start of October. First of all, be aware of this disclaimer. It explains that this video is shown to a global audience but may not be suitable for the entire audience. Take a look at admiralmarketsglobal.com, select your country of residence and contact an appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor. By continuing watching this video, you agree with this risk disclaimer and you are aware of the risk involved when trading. Starting off with the euro-dollar daily chart, basically what I'm looking at is a massive triangle. We're getting in a very tight zone here, very small range, and price doesn't seem to be able to break out. Price has gone like this between 111 and 113 already for a while now. Let's see when this has entered the zone in August. So 2 months has been going basically sideways in this 200 pip range. So from my perspective, it is looking like a bearish range. I think that the resistance here is probably going to act as a turnaround spot for more downside. But you see also a lot of support levels. So this is going to be a tough break either way. We see, of course, still the fact that this is in a massive sideways zone like this, and it favors a break to the downside. You can see price was not able to break above 115. And considering the momentum, of course, we've talked about before that, it favors a downside continuation. But it might not happen necessarily this month. That could take time. This consolidation takes time. So when it will break, that is remains the question and remains to be seen. Last month, not give us much information either. Sorry, it was a small candle. The month before was doji, excuse me. But in any case, not much information there. So let's go back to that daily chart and look at the key levels that I'm looking at. For me, my perspective, I am not expecting a break above 112.80. All right. Now, if it does, right here, sorry. If it does and it breaks this resistance trend line, it could be a breakout to the upside. All right. And there could be a move up to 114, 114.50, 115. Not a lot of space, but some space. But it needs to break above 112.80, 113. Let's say that's a tough break. But if it, for instance, does like this on a daily chart or 4-hour chart, and then shows kind of a bull flag on the lower time frame, well, then it could be set up for potential upside this week. The alternative, of course, if the price does not break and bounces here, then I'm interested in a turnaround short. Basically, I would expect eventually, maybe not right away, but eventually then I would expect these support levels to break and price might find some ground to fall a bit quicker here. And in that case, we'll have to see how price responds, of course, to this triangle levels like 111.50 and 111. But if it breaks those, there's space down to 110.50, 110, and then finally a bit more perhaps down to 108, 108.50. So it takes a lot of movement here before we get into a zone where price can maybe speed up in its movement. And that's because of all these trend lines. But yeah, ultimately bounce here, bearish bounce is possible, and then there could be some breakouts, especially if price then makes some kind of patterns like this, like bear flags here. Those would be neat for continuations lower. If not, it could stay easily within this triangle as well. Got to be on guard here for the euro dollar throughout the beginning of October. We will review more setups actually on Monday's weekly FX recap with Nennet. I myself continue with the analysis on all the majors here, Forex, minors as well, and crosses and indices and commodities. On Tuesday, Wednesday, we take a look at live trading and strategy. And then we have 3 educational webinars this week. Complex corrections on Tuesday, money management rules on Wednesday, and Nennet and I take a look at keeping basically your focus or your sharpness during trading on Thursday. The price very near the Keltner band here. I think that this could be a bouncing spot concerning these bottoms. But obviously, if it breaks through these bottoms, then there could be a massive continuation of the pound USD downtrend. So that's the main question. Will it break or will it bounce? I think it will bounce. I'm leaning towards the bounce, but obviously 128.50 I think here, 128 is going to be a major importance for the pound. So let's zoom in and take a look here. You can see pound is moving as we speak. And well, I'm expecting price basically to bounce above 128.50. If it does not bounce above 128.50, I am not, expecting a bounce anymore. So that's a key level in my view. Let's zoom in even lower here and take a look. It's really pushing at this moment. See, it's breaking as we speak. I'm not taking this break to the downside. I don't like the short here. Yes, it could move a few pips here, but ultimately I don't expect it to move much. As you can see, I think that there's a bouncing spot very nearby with these targets and bouncing levels. So I'm not interested in trading it this early in the week to the downside. A breakout like this with maybe even a gap here I can see actually. So from that point of view, I'd rather wait for this to kind of on a lower time frame get divergence and maybe get a channel here and then break that channel. I will look for the hook back and try to take a long. I know it's counter trend, but in this case sometimes I do like reversal trades. This case I think it's merited to or wanted or it's a good idea, I think, from my perspective, to look kind of for exhaustion signals and look for that bounce at 128.50 or just above it and look for a rally. Now if price pushes below it, I'm not bullish anymore. I'm not jumping in shorts either right away, don't get me wrong. But yeah, there is that potential. What I would do is take a look at daily candles basically, by the way. I am going to take a look. I need to see a daily candle like this. Push through that. Push through the support, close near the low, and then boom. That's a break. I'm switching gears. I would look for the rest of the week for lower time frame patterns and continuations lower. This is the dollar yen. Amazing how long this process has lasted as well. I mean, of course, we've been talking about this particular daily channel for almost ever, it feels. But yeah, it hasn't broken yet, either to the downside or to the upside. I'm still bullish to the upside, and that does not change. But the longer it takes, the more likely it could break to the downside. And that has to do with the fact that this is also starting to look like a descending wedge. And those, considering this context, yeah, that's a bearish pattern. That's a continuation pattern. So from that perspective, I would expect it to break soon. Maybe this week, next week, maybe max. But otherwise, if it stays like this and it lingers like this, then eventually, if that happens, I would expect the daily candle just to like pierce through it, break through it, and boom, this downtrend is back in force. And the target, in my opinion, 95, which is the 61.8 fib of the weekly and monthly chart, taking the entire swing high, swing low. That's this entire swing high here, the entire upside, 61.8 fib at 95. So that is basically the signal. My trigger for downside trades is a strong bearish candle pushing through that support, just like the pound USD I just explained. Strong candle here on the daily chart, pushing through it with a candle close near the low. Now, why daily candles? It's not necessarily because I'm always trading daily charts. If you join my live webinars, you know that I like to look at 4-hour, 1-hour charts, even sometimes 15-minute. But in this case, because of these large structures, the market structure here is strong. It's spacious, right, in time. So from that perspective, I need more confirmation. I need a stronger trigger here than is available on lower time frames. That's why I'm looking on daily, on dollar, yen, and pound. Your dollar, not necessarily, by the way. I will be able to easily look at a 4-hour or 1-hour chart as price gets here for a 112.75 bounce. All right, that's what I'll be looking for on a 4-hour chart. But a breakout to the upside, I might look for probably daily, maybe 4-hour, probably daily. But definitely on a bounce, I'll be able to take a look at 4-hour and even 1-hour chart if I see signals on the 1-hour chart already up in here. By the way, it might not get there right away. It might make a bit of a dip here at these fibs and then bounce up like that. So that's what I'm expecting because of the strong impulse here. But if it does move down and then shows a bear flag, then it's a different story, especially if it breaks below, of course, this support trend line. All right. Well, anyhow, dollar yen, yeah, upside is different than the 4-hour chart, but also probably the daily chart is the best, actually. Daily candle here, poking through the resistance. Until then, it's kind of going sideways like this. I think that I might look for a long if it retests this level right in here, which is around 101, I think. Let me check that. Yeah, it's around 101. I like that level because it's kind of testing a head and shoulders here, perhaps inverted head and shoulders. It's testing this support level here, here. So that's something to reckon with. It's also just going sideways, obviously, like this, right? So it's a range. There is momentum to the upside here prior to it. So if it stays, gets to the bottom of that range, I think it's a potential bouncing spot, and then hopefully next time it will break. Last but not least, the Aussie, in my opinion, not so interesting. Still in this triangle. Amazing, folks. We've been talking about this triangle for a while as well. So I think here too to break to the upside with the daily candle or to break to the downside with the daily candle. On lower time frames, well, I guess the only thing available, as you can see, was these fib bounces, but that happened already. So 50 bounce maybe, or a deeper bounce could be interesting as well. But that is really it for the Aussie at this moment. I'm just waiting to see if it can break. I'm not a big fan lately of the Aussie, but that could change as soon as price breaks. All right, thank you so much for joining this video. I hope to see you in the live webinars. Please take a look at admiralmarkets.com for analysis, for our blogs, where Neneth and I write our experiences, for articles, and of course, MetaTrader 4 Supreme Edition. 100 plus features that make your trading life a lot easier. So hope to see you. Check that out and wish you all great trading. Cheers.